Hi, Segun Lawson. I'm CEO and President of Thor Explorations. Thor is a West Africa-focused gold producer. We've just completed our first calendar year of gold production in Nigeria. Our first gold mine, and coincidentally the first large-scale gold mine in Nigeria. Last year we produced 98,000 ounces, which was at the top end of our guidance. And we continue to explore in Nigeria, where we expect there's going to be significant growth potential for the company. We have a second project in Senegal, where we announced a maiden resource in 2021. We're updating our resource this year and hoping to get to a preliminary feasibility study in Q4 this year. Second project in our portfolio that we believe we can build organically. We're listed on both the TSX-V, Toronto, and the AIM markets of the London Stock Exchange.
Segun, thank you very much for the introduction. Good to see you again after quite a hiatus where I haven't seen you in person, but it's our first time talking on Crux. So much to talk about today, but let us first talk about the news release of this week, because it's probably at the top of your mind. You've kind of pulled up some pretty gaudy drill core. Could you tell us kind of about that, please?
Yeah, so I mean, to put this news release in perspective, there has been a 24-month build-up of exploration outside the Segilola mine pit. We've always known how high-grade and prospective Segilola is, but we've always had an inkling that there's been other exploration targets around us that are key to extending the mine life. And systematically and persistently explored through soil geochemistry, auger geochemistry, trenching, ground geophysics. We've built an exploration team. And prior to this press release, our last press release was how we had restated our debt facility with the Africa Finance Corporation. That enabled us to free up cash that was supposed to be, it had huge covenants and restrictions previously, but after having paid down half our debt in 2022, we freed up cash where we could really accelerate exploration, which our first priority would be to western prospects. And
sorry to interrupt, but if you were constrained by the AFC, and you've just been building a mine. I mean, you built the mine. Your first pour was in 2021, and your first full year was 2022. And we had COVID and the pandemic right through that. And were you able to maintain exploration, through that period?
Yes, we were. We were able to maintain exploration, but not at the rate at which we wanted to. Not at the rate where we could look at bringing in resources in time for this mine life. And to understand what I mean by saying we were constrained by our debt facility was, it was very front-ended. We paid back pretty much half our debt in our first calendar year of operation. We had to put a cash support account in place, a debt service reserve account in place. So there was, over $12 million of cash that we had to lock in an account and not do anything with. So these things were, for a company that had growth aspirations, were restrictive. We demonstrated to the AFC the strong cash generation of the project and our ability to pay back on time. And we significantly de-risked their facility by paying back so much in the first year that they were comfortable with restating the facility, removing the covenants, and spreading the balance of the payments over the next 24 months.
Coming back to that phrase, growth aspirations, obviously your balance sheet, as you go through your the next year and the year after that, will strengthen. So you should be having growth in free cash flow and growth in on the treasury side of things. But the flip side of a gold mine, of course, is depletion of your resource. You've got a mine life of, I think, 5.5 years. Is that right? And so you'll be wanting to add to that mine life by converting exploration targets into resources and then into reserves, so that you can maintain that growth profile.
That's exactly right. So we have a short mine life, but we're a first mover in a country that hasn't had significant exploration potential investment, and certainly hasn't had significant exploration with modern exploration techniques. So when you compare us with a lot of our West African peers, the Burkinas or the Ivory Coast or the Ghanas or even Senegal, when there is that existing data, where the barimian, where the orientation of the various mineralized structure, we didn't have that in Nigeria. So it has been a case of learning from Segilola, extrapolating in the region, looking at other ground truthing, historic maps, looking at where the artisanals have mined historically, and taking it from there. And that's been a painstaking process since 2017. We managed to define 9 drill targets, prioritize them. At the top of the list was these western prospects, which we finally started drilling now. And the first set of results have come back in, and we've been really thrilled with the first set of results.
And the western prospects are 15 kilometers away from Segilola, so easy trucking distance.
Exactly. So to understand the western targets, we have been defining drill targets over the last 4 or 5 years, systematically and painstakingly working through them. We've been in a jurisdiction where there hasn't been the same data you would get in a West African peer, such as a Ghana or Burkina or Senegal or Mali. So a lot of this target generation has been through learning what we have in Segilola, extrapolating elsewhere in the area and understanding the geology. And that finally culminating in 9 drill targets, which we've prioritized. Right at the top of the priority list was Western targets. And we couldn't have been happier with the initial set of results.
Because they hang together over a strike length, or just because, I know you've got those 2 meters of super high grade, but what in particular do you like about it? Is it the way that is it hanging together, or is it just the high grades, or a combination of the two?
It's hanging together. At surface, we had initially defined a soil anomaly. We had seen it in the auger drill results. We'd seen it in the trenches. We've seen the orientation of the structures, which were confirmed by the drilling. And when we drilled, at the various depths, there was continuity. And in our deepest drill hole, where we got the super high grade, we drilled underneath that, and we've intersected the structure with assay results pending there as well. So, it's an excellent tick in the box for a first pass.
What happens now? Do you leave one rig on those western prospects? Do you leave one rig drilling that out and trying to bring that into a resource category? Have you got enough information yet to say you're going to dedicate a program to turning that into an extra, whatever it is, 20, 50, 100,000 ounces? Or are you going on to test other target areas along the trend?
So we haven't got enough information just yet. So our initial phase is 3,000 meters of drilling. So once we complete that 3,000 meters, depending on the results there, it may justify putting a second rig there and have 2 rigs drilling away to get to that maiden resource. Like I say, we have 8 other targets apart from this. The plan is, whilst this is being advanced, we will be doing initial drill programs on all 8 targets through the course of the year.
Okay. Typically, one of the best places to explore is outside or on the edges of an existing mine. And you spoke about expanding the resource at the Segilola open pit. So presumably you've got another rig in parallel working that beat.
That's correct. We have a number of rigs in the pit doing grade control. They're easily, and we have flexibility in what we use the rigs for. Initial programs of those pits will be to try and deepen the pit, and then also putting in a couple of deeper drill holes, looking at creating more data and having a deeper look and getting more confidence in the underground, where we had an initial preliminary economic assessment done. So that's also going on as well. But if we were to prioritize between a satellite open pit and an underground, it may actually be quicker to bring in a satellite open pit. So these are all great decision problems to have in a few months' time. Both programs are going on. And then once we get the full set of results back from both programs, we can evaluate and then start making our decisions.
You're strongly cash flow positive at the moment. So if you paid down half of your debt and you've got $28 million left, am I right in thinking that you paid $28 million of debt down last year?
That's correct, yes.
So you've got this an ongoing expenditure. You can fund your exploration out of cash flow. You've got the flexibility to do some around your existing resource, so around your existing reserve, and also explore within the Western targets, or the 9 other targets that you mentioned, which may not just be in the Western targets.
That's correct. We're in a position we haven't been in ever before. When we actually built this mine, we never had the massive treasury war chest to carry out a significant exploration program. Now we're generating strong cash flow. We're able to deploy a lot more cash, particularly as we've restated the balance of our debt. It frees up a lot more cash this year, and it gives us the ability to explore targets that we've been quietly confident about over the last couple of years, but never had the resources to do that. So we're extremely excited by the rest of this year and the exploration aspect of the business, because we think, we are a gold producer and generating strong cash flow, but in terms of the bigger picture, we still see ourselves as a growth company, and these are very good opportunities to implement that growth strategy.
And I know you're a growth company, but just on a cash flow multiple, let's say you what's your kind of cash flow multiple at the moment in terms of your market capitalization to your cash flow generation?
I mean, we have a market cap probably about $140 million US, and let's say over the next 3 years at $1,800 gold, we should be generating, around about $320 million of free cash.
Okay, so you're not far off 1 times cash flow. I mean, extraordinary. That's a really maybe not quite, but you're not far off in the ballpark. And if the gold price pops a bit, then you'll certainly be there. Good. Let's cast. Can we just hop over a little bit of West Africa and go to Senegal? And could you tell me about the Douta Project, where you got to on that process, and what your budgets are for this year, financial and also kind of drill commitments?
So with the Douta Project, our first major milestone was in late 2021, which was a maiden resource. And that was 730,000 ounces weighing at 1.53 grams per ton. Last year, in addition to the maiden resource, or should I say further to the maiden resource, we drilled 25,000 meters. And that included some of the best drill results we've ever had in Senegal, which we press released in December, which showed significant widths of mineralization and much higher grades in certain areas. So we're very excited by that. But I think key to point out in Douta is we've never ever historically closed this resource out at depth. It's still a relatively shallow resource with a very long strike length, 7 kilometers. And in addition to that, we have, I think, 3 satellite discoveries which we're looking to infill. We have Sambara, we have Mansa, we have what we call Makosa East. So all those programs are looking to add into a centralized pit, which is the main Makosa deposit. And all the results we got last year from the 25,000 meters are being fed into a resource update, which we're looking to get out in the next couple of weeks. And the main objective of this resource update is to upgrade the categorization of most of the resource from inferred into indicated, but also at extensions of the strike length, increase the total global resource as well. So, and that's with the satellite deposits, and also extending the main deposit along strike. And then after the update of the resource, we've actually kicked off a 40,000 meter drill program, which is the largest drill program we've ever done in Douta. And that program is really to get us to a preliminary feasibility stage at the end of the year. And that will include infill across pretty much all our targets. It would also include a metallurgy testing and also geotech drilling. So we have all this data that will enable us to start making commercial and economic decisions on the Douta project.
Having once taken a project into production, which is what you've done, you now know what you need to do to avoid the bottlenecks. No, you're not. In a sense, you're not preparing this asset for sale or for someone else to do it. If you have to do it yourself, you know absolutely what the key requirements are for you to get it right, or even, let's say, even more right the second time round. Is that a fair comment?
That's exactly right. You know, we've just built a mine. We have the mine building experience. We have the mine building team. We have an EPC contractor we get on very well with, and they're strategically also a small shareholder with us. And also, you know, we have an EPC contractor that we brainstormed and problem solved with at Segilola right from preliminary feasibility study through to the construction and gold pour. So we think we're very well positioned to replicate what we've done in Nigeria and Senegal, and we hope to do so.
Going back to the kind of the drilling at Douta, you say that you've your maiden resource of 730,000 ounces, and you've now got a strike length of 7 kilometres. How much did your maiden resource cover of that 7 kilometres?
Oh, sorry, I meant the strike length of the main resource is 7 kilometres. Yeah.
But was the 730,000 ounces across all of the 7 kilometres?
Yes, it was. So in addition to that 7 kilometers, we have satellite discoveries, Sambara, we have Mansa, we have Makosa East, which we're looking to bring into the resource category this year after the drilling program last year. And that also will include some of the 40,000 meters of drilling which we're doing this year.
I'm sorry, I'm just trying to get my head around it, because 7 kilometers for 730,000 ounces suggests that it's very kind of long and thin. Kind of a single narrow body is kind of spread over 7 kilometers. Am I understanding it right?
It's not quite so narrow and thin. There's lots of pinch and swell. There's some areas that are 16 meters wide. There's some areas that are 25 meters wide. But right where you're correct, why it seems so long is because we've only drilled down to an average depth of about 60 meters. So, conventionally, if we were going down to 150, 200 meters and 7 kilometers, we'd expect much more. That's something we can come back to once we know what the metallurgy is looking like in the future. But our priority now was to see how many ounces we could get at a shallow level, how much of the oxide we can continue to incorporate in the total resource, and then also how much of the satellite deposits we can incorporate into the total resource. And
so is that 50 to 60 meters, is that all oxide? Have you effectively drilled down to the base of oxidation?
No. The oxide is only to 30 meters, so we've drilled into the transition and it's fresh, but also there's a large component of oxide for the whole strike length of the 7 kilometers.
Okay. So the fresh starts at 50 or 60 meters, and so it's oxide for 30 meters and then a transition zone.
Yeah, and then the fresh... The transition isn't that wide, so I would say that the fresh is probably from 40 meters.
Okay. Does this feel like a kind of a similar scale to Segilola? Is this likely to be another kind of 70 to 100,000 ounce potential? Or when you speak to the geologists, do they say, back off, Segun, back off, boss, we don't want to build this yet, we need to explore this has got the opportunity or the chance to be something bigger? How does that conversation go? What does it feel like?
Look, that's the constant debate with geologists. But what we do feel like, and back in the envelope, we do think we've got something ounce for ounce bigger than what we have in Segilola, albeit it's a much lower grade. We're truly blessed with grade in Segilola at 4 grams per ton. Here we're looking to 1.5, 1.6 grams per ton here. So it's a completely different type of resource. It's more bulk tonnage, low grade, probably a longer mine life as well. And in terms of ounces, bigger than what we have in Nigeria.
Okay, thank you. Do you have a kind of a budgetary commitment to Douta this year? I mean, obviously you've budgeted the 40,000 meters of extra. You've got the studies which are ongoing. You've probably got wrapped your head around the number. I don't know if it's public or not, but kind of ballpark.
Yeah, ballpark between 3 and 4 million of those.
Okay, thank you. And presumably drilling in Senegal is quite cheap. And are you doing mostly RC, reverse circulation?
We're doing both RC and diamond, and obviously for the met and the geotech, we'll be using a diamond drill.
Okay, good. So effectively, you've got a new mineral resource estimate coming out in a couple of weeks, and then you'll be incorporating the majority of the 40,000 meters into the MRE3, which will be later in the year. So you've really got to get a shifty on to get those meters drilled, the assays back, the core interpreted, all of the data included, the resource model built, the block model built, and that will then feed into the third mineral resource estimate.
That's correct. Yes, it's a very busy time for us with what's going on in Nigeria and what's going on in Senegal.
When you talk about a pre-feasibility study, surely that's not possible this year, or are you pushing the guys for a PEA? Are you looking to get a PEA out this year?
No, we think we can leapfrog a PEA and push to do a PFS, a pre-feasibility study, before the end of the year. Look, we've kicked off a number of the sub-studies, on the environmental stuff. A lot of the drilling we're doing is infill as well. We would have all of the drilling completed before the rainy season. So look, it's going to be a push, but we believe we can do it, and that's what we're aiming for.
So a PFS in 2023. Wow. Punchy. Good. It's so nice to hear all this kind of operational stuff happening on the ground. You mentioned some of the challenges of operating in Nigeria, as in not having the data there. Obviously, it's a country which is so used to lots of industrial activity, given the massively advanced oil and gas industry, and the cement plants, and it's a huge country with a real kind of engine of growth there. Has it been a challenge getting started as the kind of the first commercial miner in Nigeria, or is there enough of a heritage from their kind of the colonial days, the tin mines and the gold mines, for it to still be part of the culture?
No, I would certainly say there have been lots of challenging elements. It's been a learning process for us, but it's not just a learning process for us. It's also been a learning process for the country and for the various ministries and the governments. There's never been a large-scale gold mine in the country for the lifetime of most of these people, most of the regulators. So even support services, raw materials, spare parts that don't exist in the country, you have to bring in. Exporting your gold, learning that process of exporting your gold, going through the various agencies, the customs, the Ministry of Finance, not just the Ministry of Mines, having everyone aligned after, different ministries that are normally so fragmented. So that was all a learning process and quite challenging. But there were also some huge advantages of being in Nigeria, even just looking at our financing. The bulk of our financing came from the AFC, which is headquartered in Nigeria. There are a lot of transferable skills from the cement and quarry industry. There's some very qualified, heads of departments from the legal side, from the accounting side, from the finance, not necessarily the mining side as well. And like you say, a very sophisticated oil and gas sector. So through construction, a lot of the skilled labor as well, we were able to get from the oil and gas side and implement on our project, and that really helped as well. So, there were some areas that were very challenging, and there were some areas where we thought it was very advantageous from being in Nigeria.
I bet some of the pipe work, they were going, what, you mean it's not operating at high pressure and acidic and, or waxy, or,
Yeah.
Yeah, I bet the welding skills in Nigeria are pretty amazing. Just one of the things you said, kind of spare parts. Presumably you have to run with a slightly higher inventory of spare parts than a company which is in a more mature mining destination. So you've probably got were you prepared for that in your working capital, or have you had to adjust your working capital as you've come into production?
Oh, no, we overcompensated for this, and we continue to, it's a learning process. We continue to optimize this every quarter and think what's best, with all our spare parts, with all our supplies, and, Nigeria not being, should I say, the mining sector being at its infancy, is also at the back of the supply chain for a lot of these spare parts and reagents. So we have to really plan ahead and make sure we have the ability to stock more than the normal mining company would. And we've managed to do it properly, or we've managed to do it efficiently, and we're very happy with how it's run. We haven't had a big impact. In fact, we haven't had a negative impact on our costs, and we hope to continue doing that through the course of the life of the mine.
Well, congratulations! It's a phenomenal achievement. Let's look now at the kind of the capital market side. You're by conventional metrics undervalued, which is presumably a lack of understanding of the Nigerian gold industry. It's presumably also a factor of your relatively short mine life. You've got questions over the growth and longevity, and you're listed in Canada and in London. Is there a difference in the kind of questions that are asked in London to the kind of questions that are asked in Canada?
Yeah, I would think so. I think the investor community, capital markets understand West Africa, or should I say, are familiar with West Africa a bit more than I have found in North America. However, I don't think it's really more of a specific London, Nigeria thing or North American Nigeria thing. I think it's a general Nigeria thing because there hasn't been a precedent in terms of having a company invest in and that has delivered. There's been a swathe of North American companies that invested in gold mining in Burkina or in Mali or in DRC. And if we were to compare those countries with Nigeria from a political stability point of view, or an economic point of view, or GDP point of view, or foreign direct investment point of view, Nigeria would appear to be much more economic stable, a bigger economy, more stable politically. However, the fact that it hasn't had a mining sector that's thrived, or a mining sector that's had a track record, has made it harder to attract these commercial investors. So what I have found is, over the years, once we promise something, and if we can deliver, and we have delivered, we have gradually got more and more institutionalized over the last 24 months. And I see that continuing. And, it's more about educating people about the environment we operate in. You take the word mining out of it, and you compare the foreign direct investment that comes into the country, it's significant. And in addition to that, every quarter we keep demonstrating we're generating cash, where we continue to be successful with our exploration. We have a second project organically, which we hope to build. We believe that the market will take notice. So that's all we're focused on now, is continuing to deliver and continuing to get the story out there to people, that there is a lot of value here that will still be unlocked, should I say.
The four areas in which you're going to be delivering this year, just if I can summarize it, it's the economic potential of Douta, it's exploration results and potentially feeding the hopper of longer life at Segilola. It's cash generation and economic kind of strengthening your balance sheet as a corporate, and then it's kind of delivery of those production milestones at Segilola.
I would say I would agree with that. Strong cash, growth potential, second project in Douta. And I think overall, I can't overemphasize enough being the first mover in Nigeria. So the first mover advantage there, and look at any interesting opportunities in the country. That's also something that investors should take note of.
So so people are coming to you with projects, or you're able to review the database. You've got the relationship with the mines department, so you can kind of see what the priorities are.
All of the above. We're building a strong brand and country with a strong reputation of doing things correctly and delivering, and we're able to attract opportunities, and also being first on the ground with a organically run exploration team that's able to go out and find anything that looks interesting. With all the heavy earth-moving equipment we have at the moment, being able to move very flexibly in country as well, has opened up a huge amount of opportunities. That combined with the fact that we've restated our debt facility, and we're able to free up cash to move more nimbly and implement exploration much quicker. For example, having our own lab on the mine site, being able to turn around assays in a matter of days instead of 5-6 weeks. All these provide an excellent first mover advantage, which I don't think the market recognizes, and I think they will do this year.
Thank you. And just coming on to that debt question, you've got $28 million of debt, and you were kind of tasked with paying off half in the first. It was a very front-loaded facility. What's the schedule of it looking like? Are you going to be paying that down over? How many years will you be paying that down over?
So we'll be paying that down over the next 24 months. In fact, in our press release earlier this year in February, we set out the schedule. So the repayments aren't onerous this year. There's about $1.2 million a quarter up until Q4 this year, where it's $4 million, and then a couple of larger size payments towards the end of 2024. So we think we've got enough cash cover to repay that. There's also, now we have a lot more flexibility with what we do with our cash. There's also 20% sweep to the project facility on any cash we upstream for anything, so that can also accelerate the debt repayments.
Good. Segun, thank you so much. It's been really fascinating. I wonder, before we go, could you, I know we've broken down your deliverables into the 4 streams. Could you do the same thing, but just perhaps in quarters? What you'd like to kind of block out news flow wise during the course of the year.
Okay. In terms of news flow, next quarter is significant. I'll start with this quarter. This quarter we will have an updated resource from Douta in Senegal. We're also kicking off our 40,000. We've also kicked off our 40,000 meter drill program. So expect news flow in this quarter and second quarter. In terms of in Nigeria, we have quarterly updates on our production. That will include our all-in sustaining costs for the quarter. So economically, you'll be able to see how we're performing and what cash we're generating each quarter. In terms of exploration in Nigeria, now we've freed up the cash. Drilling is a parallel process to operations, mine production. So we are constantly drilling at our different targets throughout the year. And starting from Q2 this year, we'll be coming out with drill results. And that will be an ongoing process throughout the course of the year. And finally, in Q4 this year, we want to end the year in Senegal with an economic study, and we're aiming for a preliminary feasibility study there.
Brilliant. Good summary. Good luck, and maybe see you in Canada at the PDAC. But thank you very much for the interview. It's been good talking to you.
Thank you very much.